Okay, let's carry on here now. In part two, we'll start to flesh out the rest of the system here and add the other components. Now, before we do that, though, I think I've gone back to Wednesday here, where we get a trending day. We get the big spike up here, and then fairly substantial sell-off, and that's really what a momentum-based system like this, whether it's this swing here or the massive sell-off that comes, this is where you can really take some nice chunks out of the market here, because this is really what this is designed for, right? When we get these kind of momentum pushes here, we don't start off with it's not real obvious here. Then we start to drift lower here, and again, that just as a reminder, when you pull this up, right, it's going to be spectacular, right, by design, right, because it's optimized over the last 10 days to give us the range. So we've asked it, right, with this optimization here to say over the last 10 days, given this volatility. And what we're looking at here, I want you to optimize it so the price action is only outside of the bands 10% of the time, right? Approximation that gets us to 963, right? Using an ATR multiplier of 4.35. So of course, these are all going to look spectacular. Now here, even with optimization, we get way outside of the bands. Remember, the ideal scenario here is when we get a lower triangle. That's a power shot, right? If you get that, you don't always get it, but if you do, right, don't hesitate on that one. And this might be that would be a bit intimidating, I'm sure, right? After this power move, that would be a tough short to take right now. Again, it gets a little easier when you realize that, wow, I would be 95, 98% beyond the typical move given the optimization here. So this is probably the much easier trade to take right here as we get that retrace here and then coming back into it. As we looked at before, higher high, higher low, big push. Now I don't get any continuation here. You could make a case here, and again, if you want to be very conservative, you would wait for the break of structure here or the change of character. That you don't get that nice retrace here that you got here, right? So these are little nuances here you want to try and pay attention to. You really didn't get another nice pullback, right? This is the last one you got where you had a chance to get into that. I know it's much easier in hindsight than when you're here thinking, oh my God, well, of course that's going to go this direction. Is it? Right? Well, first thing you'd want to see is for it to get back outside of the inner bands. Remember, that's containing it at a smaller period of time, right? So don't discount, right? Don't close your eyes to the inner bands as well. So with that said, right, we don't get another great. As I just pointed out here, we don't get another great retracement, right? We essentially just go straight down to the lower band, right, and then off we go again. So little things that you missed that one, right? Which you're not going to get everything. Right, that's awfully nice, right? Again, very nice in hindsight, right there. Would you know, right? Would you be thinking, oh, test of the IB, it's going to go again? No, you wouldn't know. And if you were more conservative, which, I don't know that I'd have gotten that. But the point being here, I'd have been looking for the next retrace, and you didn't get one. Right, so again, you're not going to get them all. Okay, let me carry on here. Let's go back to the early part of the day here where we start. We come into the day kind of neutral, slight drift higher, and then hard down. You can see swing retrace, right? Here's the red dot. Remember, the red dot is a retracement. A downtrend is established, retracement. Downtrend, retracement. We don't get another dot here. Oh, probably another measured move. Here, now we get a couple of triangles here because we're outside of the bands. Now we're going back the other direction. Okay, let's add next. Let's add the grid cloud. Okay, it's a 9 period. Oh, it would be very similar to a Gann high-low as we get a flip with the 9. Again, there's no magic to 9. It's very effective with a system like this in terms of getting you in early. You could use a 21, which also I like to use very, very much. But for this kind of a system, for getting in a little bit earlier, that 9 period is quite effective here. So you've just got you're getting a flip of the high low in that 9 period, and a little color coding in the center to keep you on the right side of the market when they're just squeezed like this. Of course, that's you can just guess, right? If you were looking at a squeeze indicator, you'd have a squeeze here, as we have a contraction of volatility, and what comes from that contraction, the expansion. What happens at the expansion? We get outside of the bands, right? Then we get a red arrow, a red triangle here, suggesting here potentially an opportunity to trade that in a reversion to the mean. Pull back, pull back, pull back, pull back, and we get one wick gets outside of the yellow band here, the outer band here, and then right, quite the shot. Okay, right. So the idea of the inner cloud here is just to help with some of that timing. Now, good timing here, right? It makes it a little easier. It's just to give you a little bit more conviction to confirm, right? You don't have to pick the absolute high. You likely won't, but you're gonna. That's my point earlier. If you're waiting for a little confirmation, you might use either a break of structure, a change of character, or a flip in the inner 9-period EMA bands, that EMA cloud, to give you that little confirmation, right? You're not, again, you don't have to get the tick low, right? That little sweep here, it's going to pay you nicely. And then it can be a nice tool in terms of, are we flipping? Nope, we don't flip over. We don't flip over. We don't flip over. We've got a flip here, short-lived, and then we get into chop, 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 right? And then we don't see another flip, then we head down hard. Things to look for here. When we're inside the inner bands, this is a no zone. This is a no trade zone. You have no edge here. You're just going to get chopped up. Algos, just eat your lunch right here, right here. Oh, here's noon to 1 o'clock. One little push up here at 1:20 before the big dump. This is if nothing else, right? The value add here of these 9-period EMAs being on top of each other, and you're not even making the outer band, the outer edges of the inner bands no trade zone. You're just hovering around the mean. Right? You're not to a point where you'd have an advantage, right? This is no trade zone. So the inner bands can certainly serve as that kind of guiding you in that direction. And then when you get out of the bands using the crossover, right, that can be helpful in terms of timing the entries. Okay, so you've got the EMA cloud. Then we also have something that he calls the alerts. You can, I'm not sure why he calls them alerts, but you can certainly set that as an alert. They would be very similar to our Devil's Friend indicator. It's an ATR based. You can think of it like a trailing stop, right? So it can be used both for entry as well as exit, because we're looking at an ATR multiple here, and so it can be very useful to attach your stop to these. Right, so let the break of these ATR dots take you out of the market, and you could do it. You could use the EMA cloud. You could use the ATR dots right here. If you're attached to it, there you're going to get wicked out there. You can attach it plus a couple of ticks that allow for a little cushion. Those are just other confirmations you can use here. Oh, let's go back up to the top one here. We get here, you might consider this, I've broken the ATR range here. Now break up and break back down. Maybe you use the cross here as we come back in. I always, in my view here, ideally you're trading multiple contracts enough to where, even if you're just trading two, first one goes out at your first target is the mean, right? The center line. That's the reversion to the mean. If you get a runner, well, maybe the way you can attach a runner to this so you get maximum bang for your buck there, and for the risk that you took, is to attach to the ATR what he calls the grid alerts. They're customizable. I think the default here is about 2.7 times the ATR period. Again, these are all default settings, right? It's very, very tradable by default settings here. But again, right here, that's what we just looked at. That's noon. You're inside of the inner bands. That's a no trade zone. At the very least, I want to see them outside of the inner bands, right? So I know that I've got some statistical edge. Like here, I'm outside of all the bands. And again, I know it's a little easier in hindsight, but you put something like this to draw this over here, and you've got potentially now you're going into some resistance. Now you might say, well, it didn't get all the way there. Well, look where the bands are. Right, it's kind of a guide. Now, is it going to tee up that perfectly in a non-optimized circumstance here where you're in real time? Maybe, maybe not, right? But this is not going to change. And maybe you're further outside of the bands, or maybe you didn't quite get there. But in terms of where you might anticipate some resistance, price is price, right? We're not optimizing price, right? So that's not going to change. But here's the swing, here's the break. So you could, again, the market structure is almost impossible to miss with a system like this. So here's your change, right? Higher high, higher low, higher high. Oh, something changed. Lower high. You may, again, you may don't look to be getting the tick swing high. Break, retrace, maybe you're getting that, right? Scalp. Oh, I didn't get much, right? Can you re-enter? Much better trade here. Where do we go? Outside of the bands. Reversion to the mean. right? Again, careful of that, right? But the reason this is a decent trade here, note we're getting to the outside edge of the inner bands. After that break of structure, that's perfect. We don't get outside the outer bands, right? The yellow band, we don't get outside of it. I get right to the inner band, right? So we don't want to trade this. I want to at least get to the outside edge of that inner band here, and then I can take that reversal as we come back the other direction. Right now, it's not always going to go through the floor, right? If nothing else, maybe you get your scalp out here and your runner gets stopped, right? So maybe let's call that a scratch. You got to be quick to pull the trigger again, right? What would give you pause there? Do we get a higher high here? No. Right, failure swing, we're coming back, EMA lines are crossing, right? I can take that because I've had a failure swing here, right? Lower low, lower high, lower low, lower high, lower low, lower high, right? Now you're right in the middle here, you're right at the IB. Can you take it again? Judgment call. Here you could wait for the break of the grid alerts here. You got another scalp. That's bigger than you think, right? Remember, this every bar is 30 ticks. That's bigger than you think, right? There's at least $100 there, right? You're trading multiples. Maybe you got 200 there. No trade, right? Nothing. You do not want to trade that, right? Don't try and guess. Oh, it's going to break, right? Would you think, right? Oh, it's going to break way up to new highs? Probably not. But we don't even get a new high from this pivot. See, that's one of the big advantages of Renko. There's a little trade-off, right? You lose some of the nuance. You don't see a fair value gap. But, okay, the market structure is hard to miss. Really, lower low, lower high. Lower low. Oh, wait a second. I broke something here. Do I want to take that? Maybe, maybe not, right? The broader structure is awfully bearish. And we know the market, there's a perfect, think of it as a zigzag. There's a perfect three-wave correction to the outer band. I don't get outside. What do I have here? Red dot pullback, red dot pullback, red dot pullback, 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 pullback. These are pullbacks. All right. So look here. So we don't make the outside bands. We don't make the edge here where we're getting either band. But what's happening here? Now I'm crossing. I'm getting an EMA cross. I'm getting a cross below the alerts. You could have trailed your stop here on the ATR alerts all the way down. You're taking out here. So you're where's an arrow? You're in here, you're out here. All right, again with 30 range Renko bricks, that's a meaningful trade. So something to look for. Okay, all right, so we've got all of those. Now the last piece of this that we haven't added yet, we've got all of these. We've got the dual bands, we've got the grid alerts, we've got the EMA cloud. Now let's add the momentum. Now this can be very, very, very useful. Let's reset this here. And it's just one more confirmation. So, let's see here. Let's go back to earlier in the day. You'll notice here there's a bit of a chop zone here when we're inside the range here. You see the green line, the red line here. It's a bit of a chop zone here. This is kind of a no trade zone. So if you look up here, what we see here, we're in this chop zone. The bias is lower here, and we get these emphasis bars when we're breaking. So if you see here, this push down here is tied to that red bar marker here saying, okay, we've broken, and now momentum is lower here. Here's a very short-lived push higher. It's a retracement. We get the red dot, right, and we carry on in the trend. So it's much like just the way the Renko bars are formed, the slope of the bands, the EMA, all of it. If you just look down here, it's hard to miss what's happening, right? Where is we don't even this retracement here. We don't get far enough here to trigger anything on the other side of the chop zone here. So this is just a great retracement. Right? Note here, I can't even get to flip the momentum bands here as I did here because I had a more complex correction here. I got a zigzag here. So I get an up, down, up, and then we come back the other direction. Just one more, and it can be very effective here. Let's get the crosshairs. Let's put it on, right? So where do we go red here? Where do we go green? Your counter trend here. Do you want to take that trade? Maybe not. Maybe you took it here on the count thinking you're going to continue to go here, but note what's happening here. We don't even make the lower edge of the bands, right? So this is kind of looks like, oh, maybe things are turning around here. Look at the slope of the bands here. Now we're going sideways. I'm getting up, I'm getting down, I'm getting up, I'm getting down, I'm getting up, right? Swing up, swing down, swing up. One last swing up. Now, oh, all of a sudden, right, I've been going sideways here in the bands. I know, I know that can be annoying here because I talk with my hands on the mouse. Right, so we get up outside of it here. If you're conservative, you're waiting for that break right here. Well, now I need it again. If you're conservative, come here. You're waiting for that red marker here. Where do I get it? Right here. As we're breaking, well, look what happens first. Well, pardon me, let me put it in order. The inner bands get outside of the outer bands. Price gets outside of the outer bands. I get a red triangle. I get a pullback retracement because I'm coming from a higher high. And then I get, remember the nuance here of a lower triangle. That's your go time. Well, oh, I'm not sure this is still green, right? I got a lower triangle here. I know that I want a heads up here. So if you want to wait for that, where do you get it? Right as you get the EMA flip as we come back in. Then I get the break of the grid alerts, and then I get the red bar down here and the momentum, and it's go time, right? All the way down. If you're putting your stop on the ATR, you stopped out right here. Right, and there's plenty more legs here, right? You're stopped out here. Can you go again? Well, you don't really get a great maybe here, but you don't get another retrace, right? This is all just down, 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 down. What happens here? Outside the bands. Reversion to the mean, right? Is it a pullback? Well, obviously that's a pullback. Can you go again? Do you want to go again? Maybe you're thinking, oh God, this is quite a trend. It's getting a little tired, What happens down here? We get outside of the bands, triangle. It's pullback, triangle, triangle. Now I'm back in the bands. Where's the first breakup art? Where I get outside of the chop zone here, you get a little dot. Now you can put stripes on the chart. I have not added them because it just crowds up the chart. I don't need. I can have an alert or a sound file trigger here to tell me that. Well, I can see it. Higher high, higher low. Oh wait, things training. Higher high, higher low. Higher high, higher low. Higher high, higher low. Oh, clearly we're in an uptrend. Look at the like a big smile. Right, like a big U as we go all the way back up here. Next out, right? Everybody's out. Everybody's out. I get a triangle here. Now I get a lower triangle. Bands flip. Break the grid alerts. I'm through the mean. Other side. What is that? It's a pullback because I'm in an uptrend. Pullback. Right? Do I want to go? Oh, I'm blue down here. Oh, do I want it? Do I want it? Where do I get outside of the bands? Well, note here. Right. So this is always going to lag just a bit. So you might, by the time you get, well, where do we break it? We get right here. You're already across the mean. Now, I'm not taking that, right? It's too far gone, right? I want it down here, maybe here, maybe here. But as I was saying earlier, there are times when by the time you get the confirmation, you're to or through the median, which was your first target. Now, I don't want to take it here because I'm through my first target. But if I get to right here, and I get a little retrace here, and I get more confirmation because I've got swing, retrace. I'm not getting, well, as I did, I get a close to a new high here. Wicks down here. Wicks down here. Do I want it? Do I want it? Do I want it? There's the confirm. Now, this one is beautiful, right? Because I didn't get all of it, but right here, I'm going to get all of that right to the outside of the bands. Now, if I get outside of the bands, I'm closing. I'm taking the profit. That's me, right? You know. Right, because I know, I don't have to wonder, I wonder if that's far enough. I know that 90% of the time, right, that's going to be as far as it's going to go. I'll take the 90%. Retrace. We go again. Now, oh, look, I got a lower candle, right? That's very important. What happens here? I don't get a break of structure here, but I get a lower high. Where's the break of structure? I see you, I mean, again, you can't miss the break of structure with Renko. Boom. Failure swing. Break the structure, right? Chase it here. Where do I get the dot? Where do I get the confirm? Right here, right here. You want it? You want it? Wait. That's judgment call. You didn't get another little swing to take it. What do I get outside of the bands? Pullback. Here's, all right. Look, I'm still blue here. Do I want to wait? Oh, could I go here? Yeah, you could go there. I remember each one of these is 30 30 ticks, right? So that's bigger. Renko's deceptive, right? It doesn't look like from the risk reward. It's size. Risk is bigger than you realize to your eye, and so is reward, right? So that push here, which could happen in 6 seconds, retrace, push. Now I'm not getting substantial, right? Failure swing, right? So all of that little nuance. But here, do I want to be trading here? This is after. I think we're in after hours here. But look, we're inside the band. The contraction has already started happening. Okay, I got a little pullback here. You want to try and, boy, look, I'm outside of that. Where's 4 o'clock? Here's 4 o'clock, right? It's the end of the cash session. So any of this is you're in that last hour of the day. But the cash session has closed. So there's a kind of a look at a complete session here. I'm already 20 minutes. Okay, before I close off on this one, I'll try and keep this to 2 parts. Again, just to re-emphasize here, now we're in the overnight. Here's 7 p.m., right? Perfectly tradable in the overnight. Perfectly tradable. Beautiful, as a matter of fact, right? For those of you that aren't just only trading the U.S. cash session. Okay, let me pause, and then we'll look at this on a 1 minute. Okay, so here I've gone back to Monday of this prior week, since we had a short week, just for a little variety of what we're looking at. Oh, let me get the crosshair off of here. Okay, now before we add back all the components of the GRIDAlgo system here, you'll note I've got the momentum on here. A couple of the tools, these are just native within QT, within Quantower, that you might want to consider using. You could use them certainly in conjunction with Renko bricks or tick charts or volume chart, whatever you prefer. I'm just went to a 1 minute. I know so many trade this, and I've got a TDI, which is just an RSI with Bollinger Bands on top of it. And then I've got this delta rotation. Again, this is native to Ninja. Very, very effective. Again, with something like this where we don't get, it's not as clear. The smooth lines of Renko break up a little bit here with a 1 minute chart. So these pushes of delta, one direction or the other, can be very useful. It's just a suggestion, right? There's lots of good tools in Quantower, but these are nice add-ons. The advantage of adding in something like a TDI or just even RSI or Stoch or MACD, whatever your preference is that I can start to see some of the divergences at some of these pivot points. I can see, am I getting divergence here of momentum? Unlike the grid momentum indicator here, I don't get to see divergence. Well, I mean, here's oh God, I didn't mean to get into this, but here's a pretty good example here of some pretty clear divergence, right? As we see it here, right? So I can't see that here, but I can see very clear divergence here with the TDI. Now, again, could be an RSI, whatever your preference is. So I can see that here. I can tell trend is still down, and I get I get 1 bar up here that goes far enough to trigger the green bar here, but then quickly back below here, and then as the trend turns around. But that's I wanted to make that point here. Don't shy away from using other tools that you like that would add benefit here. So on a 1 minute, the other thing here that I've added, which is this is kind of a personal preference here, is to whether or not this would perhaps create confusion on your chart or not, right? If you look at it enough, right, you'll get to where you recognize this. And this is something I put on every chart. This is just a VWAP with 1 standard deviation on either side of it. Now think of it, what we're doing here with the bands. It's all statistically based, and we're optimizing for price action to be contained with 90% of it to be contained within the bands. That's what the optimization we've called for. With VWAP here, this is dynamic in that the VWAP is moving throughout the course of the day, but the standard deviation stays related to that VWAP. So I know that 68% of the price action is going to be within 1 standard deviation of VWAP here. So often it's considered within that 1 standard deviation. This is kind of a no trade zone. It's another way to think of it. I'm not saying don't trade in here. I'm just saying that can be a way to further enhance some of your statistical edge in the market if you're trading with this kind of statistical mindset, where we're trading for those moments where we're outside of the norms, right, outside of statistical ranges here, and looking for a reversion to the mean. Of course, with VWAP, right, VWAP is the mean. So I think going to 2, do I need to see that I'm probably 2 standard deviations here? No, I like to keep it at 1. And then again, you're adding in all these other components, so the chart can get a little crowded. But I did want to just show you here that adding in some extra tools here is always a good idea, right, for a little more confirmation on the assumption it's not redundant, right? And so to be able to see that divergence that I can't see in just a block like this, or with the delta pushes, push, retrace, right? And I can see, right, as we start to flip to the other side, right, it's not as strong here. But not to digress too much, let's get back to GRIDAlgo. So now I'm going to leave on the 1 standard deviation range outside of VWAP here, and you can see, right, I mean, that alone, right? What do we do? We get away from it here. That's probably 2 standard deviations. We head right to the reversion to the mean, right? Well, you don't quite make the other side. Again, I digress. Okay, right, so just some other things to think about here on a 1-minute chart, right? Does not need to be Renko. Well, let's start adding them back slowly. Now, when I add the bands back, you're going to see, right, the extreme volatility that came at the open. So, coming into the week here, this is pretty contained, but then we get this massive dump early on. So here's the opening bar, here's 930, right? Again, I've drawn in the range here. Wow, right out of the chute, I'm getting triangle, and I'm getting lower triangles here. Oh, right, now that's early in the day, right? There's VWAP, that's early in the day. Any question about trend? Probably not. Now, you got to be quick to take that and comfortable taking that, within 1, 2, 3, first 5 minutes of the day opening. It's certainly, it's screaming at you to sell it. But, maybe, well, let's see, what across here on here. Maybe you waited for that dot, right? Where are you getting that dot? Right here. Right here, as we cross back inside the bands. Now we're getting a lower dot, right? Now this is just in your face, like sell, sell, sell. Again, maybe you didn't get that. Maybe you like to wait. Some people like to wait 15, 30 minutes, let the opening range get established here. What are we doing here? We're getting outside. And here you can see, right, now this, I know it gets a little crowded in here. I could take the VWAP off if that was necessary, but I think this can add value here. So what do we see down here? Well, okay, diamond, triangle, higher triangle. Swing, retrace. We're holding the 1 standard deviation of VWAP up to the other side of the standard deviation of VWAP. Now, because of the increase in volatility, and this is why I went to 20 days, right? Because I didn't have a full 10 days coming into this. Remember, it's optimizing up to that point in time. So I wanted to include the prior week's days to give me a cleaner, a better optimization range here. Let me take that off because I know I talk with my hands. Okay, so as we come down here, well, now after this, you can just look at the bands, right? They come in narrow and then they expand, right? Because they're tied to volatility, the average true range. So as we come down here, now I'm getting outside of the bands. I'm getting the inner bands are getting out. I'm getting way outside of the outer bands here. Now here's a swing, retrace, mean. Granted, these are optimized, right? So it's going to look good. What do we get up here, right? Ding, 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 ding. All right, now let's add in some of the other pieces. Let's add in the cloud. See, I mean, this was particularly good up here. That's 345 towards the tail end of the day. This is a whole lot of, hey, heads up here. Failure swing here, right? Can't get a new high. Are we pushing? We're going into the close. That's 330. Are we going to get one? Are we going to get a ramp into the end of the day? Well, if you waited for the close back inside. Now you could have easily been stopped out here. Remember, I mean, that's 80, 90. That's probably 100 ticks right there. So here's examples of where you might have been stopped out 2 or 3 times here. Right. So that's a good example of why. Okay, yes, right, we're optimized here. We know that the majority of the price action, should be contained by these bands here, at least 90% of it here. But that doesn't mean we're immediately going to the center line. We're not immediately reverting to the mean. It's just, hey, heads up. So if you took a stop or 2 here, you got to be prepared to take the third one, right? I know it's always easy in hindsight, but eventually, right, the statistics do what they're supposed to do, right? To tell you this is an area that's we're beyond statistical norms here. So be looking for that opportunity. Now, could be that you waited, right? You're more conservative. You wait for that break of structure. Swing, retrace, right? Can you get the retrace? You got to be quick on that. That's VWAP there, right there, right? Maybe you get this one. You know, we're getting that. There's the end of the cash session. It's hard to say quickly. But I just wanted to make a point here that if you're not a Renko fan, and, you know, some people, you know, who cares, right? Some people are like, oh, I hate Renko. Other people like, well, you know, if it creates a profitable system, all the better. You could certainly use tick charts. You could use time charts, whatever your preference is. If you're working in here with time charts, let me get back over here. I know that's getting money crowded. Let me do it this way. Let me take the VWAP off just for a second here, just to clear out, so we'll focus on GRIDAlgo. But something you could do here, I could add in market structure. Right, so this big push up here, all these triangles here, I know this is very much at the open. Well, here's the first change of character. Swing, retrace. Do I get a higher high? No. Possibly, right? No, the volatility is awfully high here because of this initial move, right? So you can understand why the bands are expanding here. Look at the inner bands, right? Very wide before they start to get back into alignment here as we get a trend established. Now look at the EMA cloud. Oh God, can that get any better? Let's put the alerts on, right? See if that can guide us in terms of a trailing stop. Break of structure, retrace to the cloud. You're mighty close to the mean, right? It's a judgment call. It's always easier in hindsight, right? Oh, we're to the mean. Now, one thing you'll note here, when the mean is flat, right? You know, that might be a better location to take partial. I still would take a partial here, right? If I'm in from upper bands here, I still want to put some money in my pocket here if I hit the mean, hit the median line or the mean. But if I'm in something that's trending like this and boom, right? There's no signs of anything. There's no divergence till I get right here where I get this little pop. No, interestingly here, if I push this up, there's no divergence. Here's the first divergence I get here, and that's where we pop inside and we break the alerts. That's the first divergence that I get. Again, the value of having something like an RSI here. I get a final break of structure, change of character, then I start to work my way back the other direction, right? Let's look at the bands start to slope the other way, right? So here would be a decent play right here. Up on the other side. Now you're awfully close to the mean, right? So that's a judgment call. Judgment call. You want to take that? These are kind of tight, right? You may or may not, right? You may or may not want to take that. What do we get up here, right? This is like screaming. Hey, there's an opportunity here. Perhaps some divergence. Well, you get a small divergence here between these 5 bars. Sure looks like we're getting weak here. Crossover of the RSI, crossover of the bands, crossover back inside, crossover of the dots, the alerts, right? Change of character. Retrace. Oh, you can't see them here because it only does it to the hard right edge, but you could add fair value gaps. This is a very rudimentary market structure, but it's not, you know, without some value. These are just native in QT, fair value gaps, but they're always on the hard right edge, right? So you won't see them here. I'm back to Monday. All right, so that you'll only see them on Thursday. Break of structure, change of character, right? Break of structure. What do we anticipate after a break of structure? Retrace. What do we get? Retrace. Break of structure, retrace. Break of structure, retrace, right? Now we're breaking back the other direction. What do I get? Retrace dot. What do I get up here? Right now I'm well into the evening hours. Right now the volatility has died down. Right, I'm into the evening hours, but is that still just as effective of a place to sell? How about here? How about here for the buy? Retrace. It's a very, very effective system. Very effective. I would encourage you to do a little back testing, both in, if you prefer a time base, maybe prefer tick chart. Maybe you want a 2 or 3,000 or 2,500 tick chart. Just as effective, right? The Renko, it's just uniquely, those momentum pushes really stand out in Renko, right? So that's another choice. All leading to the same conclusion that I would end any video series with. Trial it. Trial it. See if you like it. Trade it in sim. Start on the micros, certainly with the MNQ, which moves so fast. Start on the micros. Now here we're into the earlier part of the week where we looked at where we had that big push up and then the sell-off, right? So you can see here, you know, where's the no trade zone, right? When we're in these inner bands here where there's no clear trend. You think you're seeing a trend. Oh, like this. Oh, there it goes. It's going. Is it? Is it? Is it? Right? We're one side, other side. The last thing you want here is this thing flipping back and forth. What you're looking for is sustained movement like that. All right. Definitely, it certainly has a place in your arsenal, right? If you're looking for new tools, this can be. I typically what I do is I keep this in conjunction with, I'm going to footprint chart and other things that I would use that were always part of my trading experience prior to bringing in the grid system, the GRIDAlgo system here. I like to see this as a reference. Right now, that's easier if you have multiple monitors, right? At least a couple. Make that easier, or you could switch back and forth. Now, adding the one piece here that I can't add on a day the market's closed is volume profile, because in the same way that VWAP is giving us a statistical range where we can stay one standard deviation to VWAP, we can do the same thing with volume profile as we get a range of value, right? And we can do the same thing, right? We can know 70%, technically 68% will be within the value area of the volume profile. So now you add VWAP. I get standard deviation there. I can add volume profile. Well, I'm going to get standard deviation there. And then I add the bands where I'm getting deviation values there. And I'm getting a lot of statistical edge working for me in terms of locations to add conviction in the trade, because you're always, if something's outside of bands, right, you're inherently going counter trend because the trend had to push it outside of the bands. So what can give you more conviction there? Right, to go counter trend, well, where am I related to the volume profile? Where am I related to VWAP and one standard deviation? Where am I related to inner and outer bands? Right, it's all designed to give you an edge. That's the whole point. Okay, guys, with that, oh god, I ran 35. Okay, with that, again, my strong recommendation: trial it, test it, all the bar types. Right, see which best suits you. Okay, with that, I'll see you on the next one. Okay, guys, good trading to you.